Good morning, SMF MMTs. We just went through the first calendar options expiration in 2011, January 2011. What we are going to point out, though, is Amazon.com closed at a certain area. And we're going to find out exactly where that was. Basically, we had Amazon close at 177.42. 181 was a high, down $4.50. And Amazon will be reporting earnings, I believe, either this coming week or the week after, but we're going to go through that in a different video. So what I want to make clear is that you can see that you had a 345% gain in the 1/22/2011 options expiration. The 185 put right here on Amazon also had a 118.29% gain. Let's take a look at the 190 put, 51.57% gain. So when Amazon fell $4.50 Friday, that contributed to the premium that they gave to the downside, the short side, the put side of the market. Here you can see where the 170 put, which was in the money, it didn't get below the strike price, they 75%. So what we're just taking a look here is the $180 call, because you closed below it, lost 99.5.9%. because you closed below it. So all the calls that were once extremely bloated over here, and let's take a look at what the public got during the expiration. Well, here, these same calls on Amazon were right here on this weekly chart, this last week. They were right up here. Let's take a look at the highs. And they were inflated up here in value. And basically, because they were so inflated, they got dismantled. And they went to 1 penny. The weekly high was 11.65 during this options expiration. And look at how those call options on Amazon, the 180 strike price, it closed at 177.42, but the value, if you own 10 contracts and rode them down to zero, all of that market, all of that money is gone and useless because it was already inflated. It made its move way back over here, and that's part of the way that options work. But everyone gets involved here. And down they went, worthless. So basically, that's what happened in the Amazon name. Now, we're going to go into February, and we're going to take a look at what our best options are going to be, as far as both the call side, the upside of the market, and the downside of the market. So far, earnings, they've been treating them horrible in the first week. So we're going to look at the imbalance ratios and take a look and see how Amazon's going to be treated. Amazon will give a good quarterly number, no problem. Doesn't matter. But look at all the money out of that bloated contract. This is what happens in options. They get bloated. They're called bloated, means what? Inflated in price, and they come back down to zero. So they're tradable all the way up. The public never gets out in time, and big headache happens during options expiration week. Zero. And here are the different calls and strike prices and everything that's right here that's on the live video for my new MMTs. And they need to go back and look at the column. Put call, just go over it again because we're going to take a look at the new February contracts.